Well, hello and welcome back to the Residential Roundtable. I'm Eric Deems, advisor and principal broker here at Land Advisors in Nashville. My business partner, George Schubert, has also joined, and we're going to provide an overview for what we're seeing here in Nashville. This is a Q2 overview. So we're looking at data up through the second quarter 2025 here in Nashville. We'll do a deeper dive into the residential market, specifically home builder data, as well as multifamily data. Um, Many of you know Land Advisors, but to provide just a quick update on who we are, founded in 1987, so approaching 40 years in the business. We have about 31 offices across the country where we focus specifically on land and land related assets. We're having a lot of success here in Nashville as we're coming up on 4 years of Land Advisors being in the Nashville market. The Nashville market has been growing in a big way. It's no surprise to anybody on here. A couple of things that the land basis in Middle Tennessee has largely been privately owned and controlled, whether that be a family or a group that's held it for 10 years or 110 years. And it's quickly evolving into a market that is investor controlled. So Land Advisors works with landowners, works with builders, works with developers to help them understand kind of what we're seeing in the market as we're navigating conversations across the MSA in nearly all of the municipalities, all of which have been experiencing growth at record paces. A lot of them seem to be changing as they go. And that's frustrating for many of us as we work on a project 6 months in, only to have things change. So information is important, and getting the latest information is critical. And George and I are spending a lot of time out there having those conversations. Sometimes so you don't have to, but oftentimes so we can compare notes to really help you with your strategy in this market. Land Advisors Capital is a sister company of Land Advisors within that LAO umbrella, where we provide capital solutions, debt structured financing options for our clients. And Launch Development Finance Advisors exists and help with some of the new bond financing tools that are available to us here in Middle Tennessee through the infrastructure development districts, the IDDs. Some of you joined on a recent call there. So I'm glad you did. That's Land Advisors. Our most recent office of note is New York City. It's not so we can sell NYC land, but as many of you know, the land and lot bankers are showing up to Nashville in bigger ways. We have national developers showing up here, and we wanted to have deeper relationships with the capital sources that are providing equity and credit and debt services to these clients as they're building projects or holding for future projects here in Middle Tennessee. So it's been helpful for us to deepen those relationships so that as our C-suite and some of those C-suites are able to have conversations, we can have a more macro conversation about companies that are in multiple markets as George and I continue to work with the local land act and division teams here in the market. Growth, growth, growth. 350,000 new residents expected over the next 10 years. No surprise there. Nashville just came out with the Unified Housing Study and analysis, the city of Nashville, Metro, and they predict that just in Metro, we will need an additional 90,000 housing units over the next 10 years. Our number of 125,000 new units contemplates the entire industry. And when you look at where we started growing to where we are, we've been on a growth trend for several decades now. George?
Our population continues to experience strong growth. We consistently get 30 to 50,000 people that move here annually, and we are finally through broke the 2 million person total MSA population mark. Which is really cities to either take off like a rocket ship or they stick around that number. And 2 million has always proved a pivotal number throughout history for American cities.
Mhm. And it just highlights the need that we have for infrastructure and that needing to be a priority, which we're thankful to the state legislature in being supportive of the development districts and other things. That's going to unleash some of the extra of those lands next to or adjacent to municipalities that are in counties that otherwise we wouldn't be able to get sewer to. So, and of course, top marginal income tax rate, we're at 0% for income tax. That helps. Being the least tax state in the union has contributed a lot to Tennessee's growth in recent. The resale homes, months of supply, a bit of an uptick here because everybody's kind of waiting to see what the rest of this year looks like and where mortgage rates end up panning out. But resale homes, these are folks, those are not new builds, these are existing supply. Um, and of course, coming down, this chart goes just back to June of 2020. That's whenever a lot of activity began to happen and a lot of homes began to be gobbled up on the resale, which gave great opportunity for those of you building new. Now we're sitting at about just over 5 months of rehome supply on the market. Median household income continues to go up. At the same time, we continue to have expenses going up, um, not only in Tennessee, but across the country.
And while these higher mortgage rates have been quite painful, one way out of that is higher median household incomes, which have continued to grow and are growing pretty rapidly here in Middle Tennessee, which should help the housing equation.
New home starts versus closings. Closings have surpassed new starts, not a surprise. To many of you on this call, we're now at 98 over the last trailing 12 months, 9,800 and just 9,300 starts. It an easy way to explain this, just how difficult it has gotten to get lots entitled. And when you do work to get lots entitled, where we thought we could get maybe 8 units to the acre, 8 to 11 units to the acre, things are getting tighter, and maybe it's 5 units to the acre, depending on the municipality, 1 unit to the acre. It's frustrating. George and I see it as a real opportunity for educating and working with partners like ULI and others to show how density on the corridors, density is not a problem. Proximity helps. Everybody wants commercial amenities for their communities. It takes rooftops to get that done. Most home buyers today don't want an acre to take care of. Most of them don't want a half acre to take care of. Every municipality wants good stewardship in their towns and in their communities. And so taking less of a sales approach and more of a teaching approach as we're meeting with councilmen, planning commissioners, mayors, and what have you across the mid-state, to help them understand that George and I go to a lot of public meetings, and we're starting to hear more and more people complain not only about traffic, what used to take them 7 minutes now takes them 11 minutes to get somewhere, but affordability, not being able to afford to stay in the town when they're downsizing, not able to afford to stay um, in the city with their kids when they come back. their kids not being able to find a place to live. So there's a lot happening now at these public hearings where we're hearing more complaints of affordability, which goes directly into the need for allowing more residential permits to exist. And here's a map, or sorry, a chart that shows just the breakdown that we've seen kind of on single family and multifamily. Multifamily being the gray, single family being the kind of the bluer color here. George, maybe speak a little bit to kind of where we are on permits.
Multifamily, and then I'll get to single family. As we know, with single family starts have slowed, um, and that's due to slower sales cycles for a lot of the people on this call. As far as multifamily, has permits have slowed drastically over the past 24 months or so, and during that time, a lot of previously put together deals started to deliver. And here in the next quarter or two is when we're really going to see the lack of starts from 2 years ago rear its ugly head as far as rent prices and apartment communities being full. We're still experiencing the population growth and the absorption to fill those apartment communities. But when there's no new supply, it creates a tough equation.
So the average new home price and price per square foot, um, we saw a leveling out earlier this year, a slight decline in pricing. Um, I think this will help consumer confidence, um, especially given the Fed's actions. George, anything specifically to hit on here?
While headline prices are still very high for new homes, I know you guys are experiencing the pain of all the incentives you're having to get through to move new homes off your books, and the lack of starts should keep things moving when demand gets a little bit more frothy.
Sure. Um, top subdivisions by absorption by top subdivision absorption by ranking. Of course, a friendly reminder to everyone that we are just focused on the 10 county MSA here in Nashville. Vacant lot VDLs, month supply. We're currently at about 16, almost 17 months. We have about just shy of 14,000 vacant developed lots. But as we've talked about before, we have a lot more builders than we have developers in this market. Um, and that's been the case since really coming out of 2008, back when we only had three national home builders in the market. And of course, in 22, we lost several more local developers. We are seeing an increase in out of town developers coming to Nashville, a lot more sophistication from kind of the capital stack that they're bringing. That being said, a lot of these lots, a lot of these VDLs are not on the market. They're not out. So could be a bit misleading. So a lot of these VDLs are just future pipeline for the builder that currently controls them. Something to keep in mind when you're comparing the Nashville market. Once again, we tell the story 1 o'clock to 7 o'clock. 1 o'clock being Sumner County, White House, all the way down through Wilson County, through Rutherford County, into Williamson and down to Murray County. That 1 o'clock to 7 o'clock as the face of a clock would shows exactly how we develop. And as George and I say, we're land brokers, which means we chase sewer capacity, which seems to get more challenging these days. But nonetheless, that's kind of the growth pattern, this showing each county and kind of where we are. And we can dive in and speak to each of these. We're having success working with a number of builders, thinking through their strategy in different places here on the map. Um, and would be happy to connect with you and your team if we're not already meeting with you, just to think through lot positions you may have that don't make sense today. Maybe they made sense when you started that process, when you were working through entitlements, you got it ready. And now the market has shifted. Internally, you all have shifted strategies. We're having success taking both finished lots to market for developers or builders that aren't going to perform on a portion of their development, or just taking a project to market at different various stages for a builder that just isn't going to move forward anymore. So we'd be honored to have those conversations with you if you were not already speaking with you, just to show what's happening in the market, what we think we could be able to do on that, and kind of build a deeper relationship with you moving forward. So now George is going to speak more specifically on multifamily. We have a couple more slides before we wrap up.
As I said earlier, absorption continues to keep its highs from a couple of years ago, and we are quickly watching deliveries fall off of the chart. Assuming absorption continues to hold up from its averages of 23 and 24, we're going to see a lot more people wanting to rent than new product that's delivered for them. And you will see that bar graph of deliveries when the 25 one comes up, probably below that 4,000 number. And if absorption stays where it is, you're looking at a significant supply versus demand gap across product that's largely 95% occupied.
Yeah, and we've seen George record absorption, right? The last couple of
Yep.
years, this year on track. That doesn't always necessarily mean it's the best deal for groups. They're getting them leased, but probably not at the numbers where they want them leased, correct?
And part of it's the issue with a lot of people are just priced out of the housing market and having to rent.
Yeah,
Um, Maybe not all renter by choice.
yeah, that's right.
As we've seen on the occupancy front, it's continued to hold steady at about 95%. Rent growth has been flat to slightly negative the last 12 months. But with the coming supply and demand imbalance, we expect rent growth to be healthy, assuming consumers can handle that.
That's right. Very good. Well, that's what we have. Feel free to reach out to us. For the hundreds in attendance, the millions who wish they were. Thank you very much for being here. As I said earlier, we're enjoying the opportunity, especially as a lot of uncertainty is still kind of evolving. I know we all thought survive to 25, and now it seems to be survive through 25. As you're thinking about the land that you have, pipeline projects you're pursuing, projects you have near completion or near ready for development, um, we'd love to have a conversation about your strategy, what that investment strategy looks like as you're either planning to go vertical or planning to take a portion to market. If we can bring kind of have a revenue hit for you on a portion of a project, we're having success with a number of you on this call doing that, and we'd be happy to continue finding ways to serve in that way. So thanks again, and feel free to call or reach out however we can help. Thank you.